Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by. Could I please get a audio and screen check in YouTube? Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. And the Bookmap Discord Trader Lab chat. Thanks, everybody. Thanks for letting me know. All right, good morning. This is the Trader Lab stream. And this is about integrating Bookmap order flow tools with auction market theory using a tool called the volume profile to see inside the intraday developing time frame. It is a top-down, in other words, higher time frame integration down into microstructure for potential triggers. And the goal of the stream is to help traders understand how to get aligned with the market, how to integrate potential setups or structured trades into a process, and then to derive a statistical edge or vetting trades that give you an edge. The thing about trading, and it's important since I know we have new visitors to the stream, is that trading is not a prediction-based business in spite of what our psychology is looking for, to predict, to create certainty. That's prediction. In the reality of trading, and again, I'm only giving a personal opinion from my experience, is that we can't predict anything, and that's because of the various players or other participants in the market and how they might impact it. That isn't only the other players, if you will, or participants, it's also economic events or somebody just tripping over the cord at the CME. So the thing about this is, if we're in an environment that is random, and please grab a pen and paper, if you can accept randomness, it relieves you from the need to be right. It relieves you from the need to predict, and it allows you psychologically to be open to whatever might happen because you have no control over anything in this business other than yourself. And the thing or the model, I believe, is gaming theory, or how casinos operate. If you can place yourself on the dealer side of the table and interact with the gamblers, over time, you have the opportunity to extract dollars from the gamblers. However, what is the reality of casinos? They deal cards in a game that is structured and vetted. That means they know they have an edge. They don't know about the cards coming out of the deck. They don't know how the gamblers will play the cards. So it's all random, just like our environment, except our games, if we want to use this as a model, are structured trades or setups. So in the Trader Lab, I will be sharing structured trades based on 60 PDFs that you can download and reverse engineer. And the goal of the Trader Lab is to help you understand how the market works, why it does what it does, and how you might get in alignment. And then the community in the Trader Lab, in the Bookmap Discord chat, is about building a business side of trading out. In other words, vetting structured trades. Where do you have a statistical edge? Just like the casinos only play games with a statistical edge. If you can reframe and maybe adjust your thinking, it may change how you interact or even perceive the business. And that is the goal here. And like everything, past performance is not necessarily indicative of future results. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. And please remember, this is not a trade calling room. This is for educational purposes only. And the purpose of this stream is to help you understand market mechanics, how it works, and how you might integrate it into a trade plan. The other part of this process is the tip of the spear, which is Bookmap. How do you use an order flow tool to interact with the market? So if you want to think about how this might work, let's think of Russian dolls. I always, and what is a Russian doll? Well, they're one inside the other, And most traders use time to define those segments. And I think of them as fractals. In other words, the clock, and I make a point of talking about this because most of us, when we start out in trading, use the term and think in time. A 5-minute bar, 15-minute bar, whatever, 30, 60. Now, daily RTH bar, yes. Anything else, and I'm only giving personal opinions, it's not about the clock. It's about the behavior. How long does it take, and this is not time-based, how long does it take for the participant interaction in any specific fractal, or as you think of them, time frames, to create a change? Can we detect those changes? If we use an order flow tool and we can see the microstructure, think the Russian doll, the little doll, where the change happens in a microstructure, can we glean insight from that behavior, and can we break that down into a process that may help give us an edge for potentially triggers? But we need to operate inside higher, as you think of them, time frames. And to me, that Matryoshka doll or Russian doll, the big one down into the little one. So it's top down, bottom up. I hope that makes sense. Now I'm going to try to move quickly. Now grab a pen and a piece of paper, and remember, this stream is going to review structured trades that are available to everyone in the Bookmap Discord Trader Lab chat. It's up to you. There's nothing mechanical in trading, by the way. And if you thought an indicator would solve the issue, I'm going to suggest that's the tail of the dog. You really need to understand how the market works so you can deploy an indicator that is in alignment, potentially, with the current condition of the market. Most retail traders think that the solution or the business is about the right indicators, the right mix, the right time frames. I'm going to suggest it might not be that. Now, if it is for you, that's great. Congratulations. But if you keep waking up with what I call Trader Groundhog Day, which is tuning, tweaking, adjusting, adding, removing, you are using random inputs in a random environment. And I can suggest to you the casinos use anchored inputs in a random environment. Why are the casinos able to extract dollars from the gamblers? Because the gamblers also are in a random environment, but they are using random inputs. Old saying in computer world, garbage in, garbage out. Anyway, I hope that might resonate with you, and I'm not here to change your beliefs, but I will tell you, I believe the same thing in my development as a trader, and I don't do those things anymore. Now, like I say, if it works for you, it's really wonderful. Congratulations, and please come to Trader Lab, because the Trader Lab's a group of traders looking to leverage their collective experience so we all get better. Not to mention additional free education that's available to all of you in the Bookmap Discord community. So that invitation is open. And by the way, I have to mention, I am streaming from Costa Rica, and things can kind of get a little strange here. Monkey jumps off a vine onto something, they bump, the power goes out, I will lose my connection. If you're in the Bookmap Discord Trader Lab, I will reconnect as soon as everything resets. It could take a couple of minutes. If you are in YouTube, I will attempt to come back in. It may take a few minutes for the stream to reconnect. And if it doesn't, there is a link in the bottom of YouTube that you can click. It'll bring you over to the Bookmap Discord chat. If you join the chat, you do not have to be a Bookmap subscriber now, ever, never, and Bookmap will never solicit you. So you have that option. And this stream is available to everyone who's in the Bookmap Discord Trader Lab chat for review. And that's something, if you find value in this stream, you might want to take advantage of. Now, I'm not going to go over statistics. Those are available to download, and you have to vet them for yourself. But you will see targeting that I'm going to be discussing. They're all based on statistical probabilities, and you know what a statistic is. At the best, maybe. Grab your pen and paper. Let's get going. And if you have questions, please post them in the chat. And please keep your questions related to the content of the stream. And in the Discord chat, please keep your posts, kind of minimize them at the moment, if you will, to the stream if there's questions. Otherwise, I can't see them. They roll off the screen. So let's see if we can get rolling here, as they say. Now, I'm going to show you higher time frame. And I like to do this, but I'm going to only do it briefly. This is Investor RT. Let me show you, let me explain what you're looking at. These are called, this is RTH daily candles. I still think of the term bars because when I started trading, we didn't have candles. It was called the bar chart. Any of you guys ever heard of those? Going back to the Stone Age. Don't forget, I started in 1980. Little did I know what I was getting into. So these are 2 days, okay? This here. And when days overlap, it's indicating two-sided trade. So basically, you have your sellers up here, your buyers up here, and there's your candle. The next day, we had our sellers, and I always go back to this, we were looking for it to take out this low. Why? There's sell stops under the low of the day. And it would make sense that we might take this out. Then what happens after that? We either come back in or keep going, right? Anyway, we just missed taking it out. And then the market reversed, and at the end of the day, it closed up on the high. That is, warning Will Robinson, if you're short, it's going to be potentially painful. And then we get this, we come down. Our target on the downside was this. This is called the low volume node. I'm going to spend a moment here so you understand what this is. These are called volume profiles. All they are volume and price. And what's important to someone who thinks in price and volume is to think about shopping. Very simple, isn't it? And I know as traders, we think complexity is where the answer lies. I'm going to suggest it's exactly the opposite. It's simplicity. And most retail traders think it's the complexity that compresses out the risk and creates more certainty. In other words, more indicators, more time frames, all, logical, right? Our wiring is to believe things, and our beliefs are generated from our primordial swamp, the words that fight and flight. And we believe that if we can squeeze out risk, we create more, quote, certainty, which is another word for predictability. At the top of the stream, I mentioned there is nothing certain. You cannot predict anything. All that you have here is maybe, and that's because we're in a random environment. So maybe, and here's how the auction works. Auction is a consolidation in reality. And because what the market is trying to figure out is what's too high and what's too low and what's a fair price. High volume is retail. And in the store, when you go to store, you buy retail. But if the price goes too high, you may not buy it. You'll say, I'm not paying that. And then if the sellers want to sell the product, they might put it on sale. Well, this is out here on sale. The market rotates down, and I'm just showing this rotation, so you understand. And this is based on the volume of these 2 days. I put these days together. Now, if I just look at this without this here, what am I looking at? A selling candle, a buying candle. But now I've got the volume. I'm looking at what happened inside. Participant behavior. I'm not paying that. And down here was the outside edge. Oh, it's on sale. And we come back here. Okay? So too low, retail, too high. And in the store, the price can go on sale. And if you think this price, retail price, is a fair price, you won't pay it up here at the time. But when they put it on sale, you'll go, gee, it's worth this. I'm going to put, ever throw a couple in the cart when you're shopping? Okay? So so this was too low for these 2 days. Now let's go to the next day. We open, whatever we do, we do. Where do we come? Now you're going to go, that's what I did when I first started studying this back in the mid-1980s. It was, 48.89. That was the sale price in this distribution. What's the low of the day? Now, there's no precision in trading, so don't look for precision. You'll have a problem. The low of that day is 48.89. Now, let's accept that's a coincidence. But isn't that a good coincidence? What do you guys think? Good coincidence. So if I know this is too low, and I don't know when it comes down here, by the way, is it going to go here? Is it going to fall out the bottom? You know, this part, no prediction, remember? It's maybe or random. When I see this, then the participants who were active in here still think this is a heck of a deal. You've got your trading shopping cart, you're shopping for S&Ps, and this is back on sale. Ever go to the store? Gee, it's on sale again. Throw 4 in the cart. That's what this is. Too low. Off we go. Now, let's go back. This is a low volume node. What is this? Whoop. A low volume node right there. That means that the volume dried up down there. So the sellers didn't, you know, it was down there. It was like a sale that was on for today only. You know what I'm saying? So the market left it. Now, this is the same thing up here, except it's in a higher time frame. This represents all the volume since January 3rd, 2020. Call that your higher time frame. I'm going over this because I want you to see how you put pieces together. And I normally don't do this, but I'm doing it because if you're thinking fractals or a top-down, bottom-up approach, I am going down in time frame and I'm working inside higher time frames. And you'll see how I go down now to microstructure, but I got to point these things out to you. This was the target. This is the same concept of this. This is too low, and in a higher time frame, this was too high. Okay? Where do we come? Too low, target. Day is done. This is the target coming up, and I shared this in the stream. Now, what do we do yesterday? Let's look. This was our retail price in this distribution. Let's look at where it was. Now, there's no precision, 48.95. What's the low of the day yesterday? $48.96 3/4. Believe me, horseshoes and hand grenades when it comes to this. Okay? Too low. There. Didn't quite touch it. Not my problem and not my job to look for precision. Remember, write this down. Random. Now what? And yesterday was a surprise, wasn't it? It was for me, you know, to see it come up here and go and cross the range. What does that tell me? Bullish. Uh-oh. But now what do? I combine these 2 days. Why? Buyers and sellers, overlap. Same as this, same concept. Now let's look at this one. Let's look. Here's what it says. Now I don't know anything, you know, it's just maybe. Too low, so I know that's too low, which I don't know until hindsight, you know, brilliant, right? But I know it's an area to observe, okay? I know this was retail. If this is on sale and this is retail, then I know if I come back inside, I can test here. And now I know I can test here and there. Whoop, get over here. Okay, so you understand all that. So now I throw a profile over these 2 days. And why am I doing that? I'm doing it because I want to see what happened between the volume, and because the participant volume is, quote, my indicator. I have no indicators. My indication is the behavior of the participants. But what do I know? I know this was too high, and I know this high has buy stops above it, right? So what do I know? I know that, and I'm going to go into something else here, this orange line is retail between these 2 days. In this consolidation, this orange line is where the highest volume is. Now, what's important to understand here is, you see this here? This is our outside edge. So in this I'm taking you back here. I want to show it to you. Too high, too low, too high, too low. Rotation, right? Retail, highest volume. If I leave it and I start a new rotation or consolidation, it's saying at the moment, and this will change, too low. Now I start this rotation. This is the outside edge where I left this volume. It's too low. Now this is the retail price. I'm sequentially moving higher. But I also know I don't know. So when I come out here, I'm just checking the dividing line or low volume node between these two distributions. Hope that makes sense. So I come down, I check it, and I don't know. Could it come here? I don't know. These are levels on the price map. So too low. Now I'm doing the same thing up here. But I know yesterday we crossed over on aggressive buying. I know there's stops above here, and I know this is a key location that I already tested. So I'm looking in this and I'm going, well, okay, what is going to go on? So often what happens is you'll get selling early because of profit taking. And then what happens? Do we come down here? Where do we come? This is now retail. So if this is the retail price, I mean, this though is an important location. The market, depending where it opens, has a tendency to come here, and it could do anything. So let's not forget it can do anything. So now I'm going to take you to Bookmap. Anyway, I hope you got something out of this, guys. This is what happens in the Trader Lab before RTH open. All these levels are put on the price map. And please remember, if I drop out, I will do my best to reconnect. I'm on a tin can in the string. I'm streaming from Costa Rica. And it's a hot day here today, going to be in the 90s. And I'm trying to keep myself together here before it gets really hot. So now let's go look at the price map. Now, this is all before it opens. And you're probably going, really? Yeah, really. So let's go back and let's look at a couple of things. Oh, whoops, hold on. Got to bring something back here. Forgot to show you one thing. Okay. These are called, this bright yellow line is called naked volume point of control. Now, remember I mentioned fractals or Russian dolls. In the consolidations, this orange line is high volume. It's called the microcomposite volume point of control. That's only because we had to name these things, and it's called a microcomposite. That's like your VPOC. As you go down in time frame, these yellow lines are VPOCs. So what a VPOC is, let me show you. And then we'll be caught up and we'll move. So, because you'll see where all these levels are coming from. This day, I think it was this day. No, this day here, 49.15 quarter is that's yesterday, is our naked volume point of control. In other words, the highest volume for the day, and we're only looking at one day now, was right there. So that's retail. In the 2-day volume, this is the microcomposite volume point of control. It is taking the volume from both days and putting them together. That was the high volume. Okay? This was the high volume of 49.13, and this is from way back. I couldn't even tell you how far back, a long time ago. And now we have 49.27. If you remember, that was our target from yesterday, and I think we missed it by 2 ticks. So today the target's 49.27, and there's more, potentially take these guys out, and then clueless. So 49.31 in the squeeziteria. Now we're ready. Now, but there's more. And this is all before RTH open. Is this too much? Let's look. We have statistics. Let's go take a look at them. And then we have that naked volume point of control, 49.15. Consider that retail from yesterday. So that was our accepted price, high volume. We have our overnight ETH volume point of control, retail from the ETH. So that's acceptance. In other words, this thing is right here. So that's saying the volume happened here, the volume happened here. Yesterday, and then ETH, the most recent auction. Microcomposite volume point of control, all of this is a high volume area, which means acceptance. Yesterday, the outside edge of volume was up around, this is called the value area high, and then down below we have the value area low. Here's another statistic for you. These are targets. overnight volume point of control, overnight mid. These are our targets coming down, and it could do anything. And then coming back the other way, we have value area high. Let me show you, just going to show you. 27, which was our target for yesterday. Isn't that a coincidence? And you're going to go, I don't know, just like me. Overnight high or ETH high, target, and the swing high. Now you know where all these numbers came from. I'm not going to be spending time on this in the future, but I've had so many requests for this, and that's why I'm taking my time. Sometimes this, you know, I remember, there's nothing in trading, it's just random, you know. But if you can understand where all this comes from, then you might get an idea of the price map. So I'm hoping you get something out of this. I will not be doing this in the future. If you guys want to see this again or something like it, you need to review the stream. It'll be there. Okay. So now let's go take a look at Bookmap. Now let's take these concepts of high volume and low volume, and let's now take the Russian doll. And we went from the big doll, and we've been going down in time frames. Now we're going to go into the microstructure in alignment with the higher time frame. This is how you use a high tier tool like Bookmap. So let's go take a look. And what I'm going to share now are called structured trades. Now, what a structured trade is, I've shared 60 PDFs of the trades I've developed over, you know, almost 44 years of trading. And I'm not saying they're good, bad, or indifferent. I'm saying is they're ideas. And they're things you can take and reverse engineer, and you have to take these ideas and make them your own. We're all different. We all trade different time frames, if you will, or different. And I think of fractals, of course, but call it a time frame. Some of you guys want to hang out, go for the 10 and 15 point rotation. Other guys, other traders are into this. Oh, I want 3 points. Now, I am not going to share my opinion of that unless you ask me. My suggestion is that you find out where you have a statistical edge, because just like the casinos, the only way they can derive an edge is to know which games to play, and they only play those games that give them an edge. You may find that if you're trading for 3 points and risking 2 points for 3, and most of us early on in our careers think, and it might be true for you again, but not for me, that I can get a higher win rate with a shorter target. That's logical, isn't it? But has anybody thought about the risk to get the higher probability win? The need to win may be based in psychology versus the edge, which is based in metrics. And I'm going to suggest you think about this. So let's look. And let's keep the post to the stream if there's questions. That would be helpful. Thank you. All right. RTH open. Here it is. Okay. And we're looking for overnight volume point of control, naked volume point of control, and statistics, overnight mid. These are high probabilities. Out here is a ETH low volume area. We have liquidity sitting there. There's a possibility we might get there, and then we have our targets up on top. So what do we know? We know yesterday we had a reversal, okay? So let's go take a look. Now, I'm looking at this. I'm going to tell you how I think. Not that anybody should think like this, because that might get you in big trouble. But I'm going, I'm always in a state of maybe, and I use another term to describe it, which might seem a little excessive. The term's called clueless. Clueless means, I'm going to translate the term clueless, I don't know. Because if I think I know, I've just cut off all possibilities, and my mind is going to filter what's coming in, those inputs, because my brain is gauged to being right, and that means I want to see what supports, quote, my prediction. I've learned I can't predict anything. Other than it's random, and that I know. So that's what I predict. So I'm in the state of cluelessness. So the way I deal with that is I have a narrative. In other words, I narrate the market. If this, then that. If not, then what? if the market does such and such behavior. And it came from when I designed trading systems. So it was conditional statements with branch logic. I took that idea after spending many years programming and writing systems, because I used to trade across numerous asset classes when I was managing dollars. I wanted to be systematized. I couldn't stand doing it, all the work manually, So it just took too much time. So I said, oh, let's build a system. Yeah. And that's where I also learned about curve fitting. So anyway, that's how you learn, right? So here's our RTH open. Let's watch now. By the way, let me get some of this off screen. This is a correlation tracker for NASDAQ. I do look at this. I don't trade off it. But if I'm looking at a long and I see this doing the Acapulco cliff dive, it might give me something to think about. But it is not, it's just something there. I don't need it to trade, but it's a nice thing to have. Bookmap gives you so many options of, tools you can use and, check out. The thing I like to do is I like to keep things simple, because the more inputs I have, just like most retail traders have tons of inputs to create certainty, for me, it creates conflict. And the casinos don't have multiple inputs. They only play 7 cards at blackjack. They shuffle the deck. They cut the deck. They deal the cards. Next time, same thing. They're not changing the game, so I don't change the game. But I do narrate the game so I can recognize change. And then that might set up a trade for me. So let's watch. So here we go. Market opens, chop, chop. Right here, I'm seeing two-sided trade. This yellow line is called the developing volume point of control. Remember high volume? This is developing in the RTH time frame. So this is going to move with the volume. And let's assume trading is really, you didn't know this, you're a shopper. So you're in the shopping, you're in the supermarket. So the shopping process is what's a fair price? What's too low? What's too high? Now, I know that this was retail yesterday, and this is retail in the ETH. I know statistically, and past performance is not indicative of future results, which I won't give you the statistics that are available in the Trader Lab for download. These have high probability, and so does this. That's what I know. I don't know anything else. I don't know how. I don't know if. I don't know when. I don't know anything. So since I know I don't know, I have to just be flexible. So let's watch. So this is two-sided trade. So the market just opened, and what might we get? A couple of things. I see the liquidity in the book. That's one thing. This is how order flow might help you. Now, it doesn't give me a trade. It tells me conditions. So I'm looking for either a short to come down here. So this is the range, or open and the buying continues from yesterday. And then I have my upside target. So let's just see what happens. I see the buyer take control. Okay, watch. So right here, I see the buyer and I come up to the liquidity. Now let's look. Now I'm going to show you structured trades. And by the way, all trades, what do? You win some, you lose some, and what do they say? The rest get played out or rained out. Here's microstructure. This is micro volume. Now, I don't know. I'm clueless. Remember, I see a buyer. I pull back here. I have no clue because I can go here first. Volume, buyer. I haven't cleared this, so this can be a problem. Is that too high? Now, it's retail, but what happens if the shoppers go, I'm not going to pay that? Then we can reject it. But I'm above here. This might be too low. Microstructure, this might be too low. I don't know. So I'm in the, I don't know. Buyer, pullback. So right here is support in my brain. And notice what it's aligned with. Micro composite, high volume structure for the last 2 days. The highest volume in the last 2 days was here. Now, it's not a coincidence to me that we have all this volume here. This is retail. Remember, in the store where the high volume is where there's acceptance. But what we don't know is, are we going to accept it Are we going to return and check it? Which one or none? And what happens when we check in the area? There's no precision. You know, it would be nice if it was. It'd make it a lot easier. So I see my buyer. I have not cleared this. So right now it's a suspect. It could do this or it could do that. And I know you always go, well, that's brilliant. You don't need to listen to me to figure out it might go up or down. But it's where it does it. So when I see this buyer, now things have changed. I know now this might be too low because I tested it. My buyer came in, okay, and now I'm looking towards upside targets potentially. So let's look at the behavior. This is now my retail price. This is the mid and the VWAP. Let's see what it does. VPOC migration. What does this say? This says right here is this is a Trader Lab structured trade. You got two of them here. If this is too low and we tested the higher time frame. Now this is not easy in the sense of you have to understand to read the market. Now I don't use indicators and I understand we all love to have something do a green light, red light crossover. I get it. Trust me, I've been there, done that. What I have found is where can I operate in real time? And now I don't know anything here except look to the right and look at my location. It's a level. I don't know what'll happen at the level, but I know what happened here. We checked the price and at the moment it's too low. That's all I know. Now, and there's my buyer. So that says, okay, long. I pull back to mid and VWAP. This is too low right here. See the volume? Chop, chop, chop is a consolidation. Break high. Too low. Think of the concept. Let's come back and check it. You can't buy it here anymore, but we don't know until we see this. What else do we know? You can't buy it here anymore. And remember, this is right now. Look at the alignment. Is everybody tracking? Do you see the alignment? Are you guys tracking? How about we do it in YouTube? Are you getting something out of this? Now, so here is a potential long if it's in your trade plan. If not, the next potential structured trade is here. This is called VPOC migration. Now I'm going to I label these and I call them variable high volume nodes. I didn't know what to call them. I made a name up. And I can't begin to tell you the pushback I got from other traders when I was trying to share these ideas. So too low. VPOC migration. I'm going to label this one. What is a VPOC? Volume point of control. Remember, what is it? It is retail. If price and volume are moving together, remember, you can't buy it here right now. This is the new retail price, and the volume is what's moving this line. Well, if you go to store and this is too low and you can't buy it here now, and this is too low, you can't buy it here now, it's reasonable to think we might go higher until we find a price that's too high. Okay? So this is a structured trade in the Trader Lab. So where was it too low? Let's come back. It's too low here. Where's retail traders going to put their stops? Under here. So let's look. If you get long here, your stop might want to be under here. And then your goal is to scale and get risk neutral. Let's see what it does. I don't know. Oh, look at that. Magic. So now, and this is how one way to do this is if you take this structured trade, and you can download those 60 PDFs so you can see these things, this microstructure with this is a trigger in the Trader Lab. Let me show it to you. Let's look. So this is a long, but if it's not vetted and it's not your thing, this is a structured trade in the Trader Lab. Let me show you the micro. This is how Bookmap can really help you right here. So right here, this is volume. chop, chop. Shoppers, but they're in the convenience store. You got this thing sitting in front of you. It's like, come on. This moves up. This is an obstacle. These are sellers, right? We pop into them. Now, this is the liquidity marker, this little thing. This is the heat map. This is showing me the orders sitting in the limit order book. Those are sellers. Now, what you don't know, is it real? Are they going to pull? Here's the other part. Are the buyers going to take these guys on and absorb the selling and push through? Or are the sellers going to overwhelm the buyers? This is part of the joy. You choose to be a trader, you're in the maybe mode, because that's the best you got is maybe. So right here, volume, and this is a long. Here, let me show you the trigger. Now, watch. This is a suspect. Chop, chop, consolidation. VPOC migration, structured trade in the trader lab. Break high, liquidity obstacle. They pull or are absorbed. We pull back and check this, developing volume point of control, high volume, and we're checking the micro structure. This is support. Why? We auctioned it. It was too, now you don't know, it could be too high, and we do the Acapulco cliff dive, but we went the other way. These guys pulled. Now we pull back here. This is a long. Your stop, subject to you vetting, could be under here, or it's under here or under here. It's all a matter of, your plan. And then you're going north somewhere. Where's our next outside high volume area? It's right there. So let's look. So you'd have a long if you're in the trader lab and that was your trade. Who knows, right? So let's watch. This is your target at the moment for the long. And that's a scale or you. Now in the trader lab, I talk about a 2-lot configuration and you have to vet all these ideas for yourself. The goal, and this is just one way to do this, you'll find what works for you because you have to vet everything. The goal is if you put a trade on and take risk with a minimum 2-lot configuration, you have choices. What might be a good way to start out in the business? And I'm just going to say it's a maybe, and I don't know the answer for you. How about if your stop is under here and you can get your trade on here? You're like me, you don't get in here because you're like a deer in the headlights. You click the plunger and you're in over here. Let's be real. So your stop from entry to down here where it fails, that's your risk on your 2-lot. The first contract is to buy the stop on the runner. So the distance from entry, call it here, to failure down here, which is not a big deal, that would be your scale on the first contract, okay? And don't forget, this is a potential obstacle here. So you get risk neutral ahead of there, and then you manage the trade subject to a vetted process. I'm spending time, I just want you to know this is kind of one way to do this, right? Who knows? Now, we're in 4 minutes. That's our first trade, so it's either there or here, okay? Everybody tracking so far, and I apologize for taking the time. I want to show you how this might work. Now, there's more. Let me know if you're getting something out of this. Let's watch. So I'm at a location. Now I'm clueless, right? And we're going on 5 minutes. We get VPOC migration. What I want to see happen here is that right here, I don't want this under this. I want this to continue higher. So let's watch. So right here, the teeth chatter. It's like, what's going on? So let's look. Liquidity here, liquidity here. Now, liquidity on its own is like, I always call it, it's like stepping on a banana peel because you don't know. I mean, is this real or are they going to pull? You see, are these guys going to drop down or is this going to pull? So you don't know. So we operate always in randomness, right? So let's watch this. Right here, I see a seller. And what do I know? I mean, it might be just a rotation and off we go, right? This is part of the joy. Seller, high volume is here. Come back and check it. This sets up a maybe situation. Like maybe we're kind of going to, and I'm up right here is my level, remember? So I'm going, if this, then that. If not, then what? If I can't push off of that high volume level, then we might counter rotate. That's what I know. I don't know what it's going to do. So we come down, and this is a concern to me. They pull, and I'm going, well, this is good, because now maybe I'll get this. Maybe the liquidity will come up in the order book, and that's like pressure. I always think of this like a hand or the tide. So, okay. So now I come under here. I'm thinking I got to get above here to keep going. I come above it. Now I'm going, much better, a little bit of relief. VPOC migration. Volume and price are moving together. This is good news. And here's what has to happen. I need to push this way for us to continue. Let me get this off, one other thing off here. I'm going to remove the liquidity marker because I want to show you how I read it. Now, and again, this is just one way to kind of, where is it? There. And there's so many more tools in Bookmap that I'm not discussing here because I don't have the time, or I would. So I'm just trying to give you the broad strokes. There's more. So right here, too high, which I don't know. Right here, above here, looking good, Lewis. VPOC migration, looking good, Lewis. And I want it to hold this variable high volume node. This is my support, and it needs to clear this to continue. Watch the transition. This is a Trader Lab structured short. Is everybody tracking? I'm taking my time, and I apologize if you're falling asleep at the wheel. But if you can't see why or how you can navigate the language of the market, you're just going to be looking at indicators. Where does your indicator tell you? Does it get you short there? There? Does it get you short there? Does it get you short there? Did it get you short there? Where does it get you short? Now, what do you do with this? How about now? So if you're in the Trader Lab, and again, nobody knows, what did we know? High volume. What does the market tend to like to do? Let's go check the price in all fractals and time frames. Do I know what's going to happen? Nope. So I don't think about it. I think about levels and what has happened and why they exist. And then I use order flow to try to detect potential change. The order flow right here didn't tell me anything. When I saw this, I know right here, watch this. Iceberg was selling. They're staying in the book. I see this. Iceberg is selling. And right here, there's nothing more in the book. I'm thinking, well, maybe they're done. That's why I'm thinking, well, maybe we're going to continue. I come back here, this shifts up. For me, this is good news for the long. Okay? So everything is okay. But now let's look at change. There's other ways to see this with order flow too. So this is here. This comes into the book. So this came in over here, this came in, but it's not really anything. It's just algorithmic. This is dark. This is dark. Now I'm getting into something else. This is the VPOC migration. Well, let's watch this. Now remember what high volume is. High volume is retail. Shopping. Go back to get your shopping cart. Let's go to the S&P aisle. Let's go look at this. Let's think about it. No indicators because this is my indicator. My indication is the shoppers, which are the traders and the participants. I don't need a lagging indicator to tell me what's happening here. I don't know what will happen here. That doesn't change. But right here, I know what's going on. So too low, looking good, Lewis. Let's do this, and we do this. Uh-oh. Retail, too high, break. This is support. Watch. Test it. Bang my head on the price. I'm not paying that. I'm leaving the store. Are you kidding? I like shopping here. Bang my head on the price. I'm not paying that. So, support, resistance. Break below. Uh-oh. Resistance, resistance. Uh-oh. Short. Scale. Watch. Let me go back. I got to show you. Whoops. 830. Yeah, I think I got it right. Let me make sure I'm not missing a level here. Yeah, this is the RTH open. So, yeah, here it is. I'm sorry. So, got to get back all this here. So we break from here. This is your short. This here. Now, what do we know? The market's long. What else do we know? Stops. What else do we know? Targets. Right? Top of the stream. So you get your short here. You'd scale into the stops at VWAP in mid or here. Pull back. Watch. Now I'm taking you into more advanced concepts, but it's fractal. So you're going to see the same thing. For example, this I'm trading in the developing time frame. So that's a short, that's a short. You be on your short, you're having a lovely day. You're scaled. Notice where it comes. Notice where it comes. Notice where it comes. High volume. So I don't know. There's high volume here too. So scale, scale. Target. Huh. What a coincidence, you're saying. Pull back. Where's my resistance? Here. Let's watch. Now, I don't know. You know, clueless. I don't need to know because I know I can't know. Volume. Now, this is advanced, so this is nothing for you to do. But let's watch it. Watch it. Just look at the structure. Break, pull back. Fractal. Break, pull back. Fractal. Not, this is advanced trader lab, so this is not something you would, do, but I'm just sharing it with you. So you'll start seeing the behaviors. Now I have targets, high probability targets here, which have not been checked. And this, overnight mid. High probability, past performance, not indicative of future results. You got to vet everything, right, guys? Target, here. Now, let's watch. Too high? What's going on over here? Oh, VPOC migration. Too high. Let's see what it does. Huh, what a surprise. Down here, overnight mid. So this is a target coming down, overnight volume point of control, okay? So you would get this target here. Pull back here is a structured trade in the trader lab, and then you're going for the next target down, which is this. There. That's a short sequence. Are you guys with me? Did you get something out of this? I know it takes time, but this is kind of how you might read the language of the market. I think that when I kind of started trading this way, and I think it was in 2000-ish, I kind of started developing and thinking like this, and believe me, it was a long time and a painful one too. I'll say that because, you get ideas, you can spend, as you guys know, you can spend a lot of time doing something and then throw it away. I call it Trader Groundhog Day. The other part of it is you can believe you're on the right track and keep tuning and tweaking, adding and removing, and then you wake up in the same place. That's Trader Groundhog Day. And the problem for me, I'm always talking about me, and I don't think I'm really different than you guys. I've just been doing it longer. Was I believed for years I was doing the right thing when in fact my process was defective. And the problem is that if you're using a random input in a random environment, you're going to have a chaotic output. So gamblers walk out with cash from the casinos, so they win. That's why they come back to the table. The casinos don't play the game that way. They have a different process. They have anchored inputs. They're not changing, tuning, tweaking. They don't have to. So what I figured out, and the light bulb took a while to kind of fire up, was that I was doing it wrong. Because I'm in a gaming business, not in a prediction business. But my beliefs were not aligned with the business I was in. So I was trying to fit this business into a box. In other words, everything is the same, but the market is dynamic and it changes. It goes from directional to rotational, different plans for different conditions. That's what we do in the Trader Lab. Retail traders typically just try to fit the market into a box, and they don't understand then that when something works one day and it doesn't work the next day. Now, all trades fail. We all take stops. It's not the point. But does it make more sense that you only interact and take risk when you are actually playing with a statistical edge? Or is it just make it up as you go? Let's do a little of this, a little of that, and let's see what happens. That's called gambling. And to me, I think if you're going to gamble or sit at a slot machine, go to a casino, get the entertainment cocktails and a coupon to the buffet, because that's, you have a better shot at enjoying yourself, but not having a business using that approach, in my opinion. So let's look. Too high, come back, too high. Remember, we're all going for this. Now, anything can happen. So what can happen? Let's look down the yellow brick road. We have liquidity here. This is an outside edge from the ETH. This is possible. So for me, since I'm clueless, remember I said clueless at the top of the stream? I am clueless, so I can't predict anything. I just trade to targets that have a statistical edge. And you can vet these for yourself. They're available in the Trader Lab. And past performance on any of this is not indicative of future results. You have to find what you can groove with. So now we come down right here. Too high, shift low. This is resistance. Shift low. Resistance. Shift up. Warning Will Robinson moment. This is support. This is now resistance. Now I've got an outside edge. Right here is important. There's potential change. Let's see what happens. See? Watch. Now, I don't know. I don't think I know anything. I don't know. What I know is this was my target. And if it kept going, I'm perfectly all right with that, because in the Trader Lab, I have structured trades. I can get back into the thing. So that's okay. And if I don't have a trade, that's okay too. I'm not here to gamble or to chase the market or do what the amateurs do. I'm here to wait for the trades that have a statistical edge. And if I don't get another trade for the day, I've got nothing left to do. But let's look. Now remember, statistic. Hindsight is wonderful. I don't know anything. It could just keep going. What else do I know? This was too high. I'm going to label it. Let's just get the labeling current. Pretty current anyway. So as the market's moving down, I'm just tracking this stuff and I'm going, okay, market's too high, market's too high. We're not paying that, we're not paying that. Retail price is being lowered. And why, by the way, why does the price go down in the market? Do you ever think about that? To find a buyer. Where are we going to find the buyers? That's what we don't know, okay? And there's no way to know. But what do I know about this? Retail in the ETH, high volume. Retail in yesterday's RTH, high volume. So it's an area of targeting, and overnight mid, an area of targeting. And this is primary. And in the intermediate time frame, high volume. This is the area to cover. And maybe for a reversal. I don't know. So I don't know. Not my job. I can't know. So I don't know. I see a buyer and I go, that's interesting. Where's the stops and where was it too high last time? Here. So mid and VWAP. I can anticipate retail trader behavior. Selling here. This is too high. Right now I'm above this. It might be too low. I don't know. This shifts up. Right here is a potential short. Right here. Okay? But I have a problem. This and this. So there's conflict. If you took this short, you'd get to here. don't forget we hit a target. So this is where experience and luck comes in. If you took this short, remember what was too low? This. See this? Chop, chop, microstructure, buyer, pullback, test. That's a trigger. Now, I have no clue here that you're going to get the buyer here. What I know is this was too low and the buyers came for it. So my volume, my outside is here. I have no clue. So, clueless. Now, I have a structured trade in the Trader Lab. Look where it comes. Look to the right. Look to the right. There. Now, this is fractal. I'm not recommending anything to anybody ever. I'm showing you the language of the market. Can you speak market? It's like learning a foreign language. And to be able to interpret anything in real time takes what's called unconscious competence. Now, many of us are just unconscious. But to develop competence, it takes a lot of screen time, replays, and intentional practice, circles, arrows, diagrams. And by the way, all of those are available to you in the Bookmap Discord Trader Lab chat. There's 60 PDFs of these behaviors plus a library of webinars if you find this interesting. So you can kind of look at them and think about it. Now, I don't know, but this is what was too low. This is a structured trade in the Trader Lab. You'd be entering here, you got to scale here. Now, here's the deal with this. Do you have enough range from entry to obstacle to get a scale? Yes, no. That's your risk reward. In a structured trade plan, if you don't have the range from your entry to your obstacle, the trade is not qualified. If you have the skill to operate with this, you can take this trade, but you have to get risk neutral here. Remember, I talk about a 2-lot minimum configuration, right? This is why. Because if the trade fails, if the trade's going to work, it's going to take this volume out. Remember, shoppers, this was too low. Oh, that's on sale. Buyer. If I know the buyer was here and this was too low, and remember how it tends to work in the shopping. They come back and check. Well, that's too high. Retail. Let's come back and check it. Still too high. And you got mid and VWAP. What do we know about mid and VWAP? Stops. That's why I don't like this trade, but if I'm just being mechanical and unconscious, this now is too high. That's why it's a short, and that's why this is your scale. I just want to explain the rationale. So why would you get risk neutral? Now you're risk neutral and your stop's here. Okay. And you would scale a little ahead of this thing. You never know. It might not get there. Why might it come under here? Sell stops are going to be under here, retail trader behavior. If I have this swing, I know there's sell stops here. Market never has to get there. That's life in the fast lane. I know this was too low right there. There's my test of this microstructure. Here's my stops. These longs, retail traders are going to put their stops here. If I rotate off, I have the potential to get these guys out, and then I have this. So that's why scale. So if you can't operate in this range to get risk neutral, hasta la vista, no trado. Now what? Back here. Where's the stops? Above here. Take them out. That's that, right? Let's watch. Now, subject to your plan, well, I'm just going to go with the broad strokes here. I'm not going to get into more minutia with you. We have more structured trades coming up. So, next trade. Now, this happens. This is called the IB60. And I'm skipping things because I want to move along for you guys. And I've been really kind of being very meticulous here because I like to kind of dive in, dive out from micro into more macro to kind of help you see pieces because it's an integration. Remember fractals, Matryoshka dolls, Russian dolls. I'm trading inside higher time frames. That's why I was pointing out things to you. So now, what do we have? Yesterday's high. We have 27. These are targets up on top, and we have the ETH high. And what else? What else? What else? This high, which is from a couple days ago, right? So now I'm going for all the targets above. But how do I get long, you're saying? I know. I understand. Well, now everybody who's short is about to get rolled. So let's look. Now, coming down these levels, let me go back here. On the sequence coming down, too high, right? Is there an old saying, support becomes resistance and resistance can become support? So I look at these in that fashion. Watch. So here, when I break above and I pull back, what was too high? This was too high. VPOC migration. This is retail. Now, I don't know right here. Are we going down or are we going up? We go up. Now, this is too low. And I also know now this is too low because I tested it all. Okay, so I know too low, but I don't know until this. I mean, I do know, but let's talk about for this conversation. Too low. And there's my VPOC migration. This sets up along here if it's in your trade plan against this, against that. Are you guys tracking? Now, if it's not in your plan, you're hanging out. You're a tourist. You're drinking your pina colada. How are we doing in YouTube? I haven't heard anything out of YouTube in a while. I think everybody passed out. I get worried about YouTube. Give me your address. We'll send the medics over with the oxygen. Now, this is the long. If you're in the trader lab and you've vetted this and it's part of your plan. But let's say it's not. What do we do now? Well, where's the high? Let's go back. Now I'm talking about this here. What's here? If we have a selling leg, what's up here? Buy stops. Where might I want to trade into? The stops. Where's my targets? Up here. So now we got the sellers. Okay, fine. And we got all the fuel above these swings as my energy or my fuel to take me up. And I have no clue what will happen, except I've already done my downside targets. And I've done this, fine, too low. So what's left? Yesterday's high. This was our target yesterday, right? And if we clear that, ETH high. And if we clear that, this, actually, where's the stops? Here. That's the trade. So now it's, you take your long, subject to your plan. You know, here, that's your long. Or, now I'm going to point out the trade if you didn't get this one. This is all Trader Lab. So let's look. Now, I see this stuff in the book, and of course I get nauseous because liquidity, you know, can be a problem, right? These are sellers. Now, I see this thicken up. Let's watch the behavior. Now, I'm looking for a trade that's called, and it happens called the IB continuation trade. It's right here, actually. And it happens at 9:30, and I'm in the central time zone, so first hour RTH. Let's look. And there's a high probability, and I'm not going to give you statistics. I'm going to say over 90% probability. Past performance not indicative of future results. There's over an 80% probability of this, 70% probability of that. Past performance not indicative of future results. All these statistics are available to you in the Trader Lab, and you got to vet them. So when I'm trading, not only am I watching the behavior of the participants, I'm also looking which way the barge is headed, and do we have statistical probabilities that give me an edge. All these pieces are put together, and it's still random, doesn't matter. So let's look at the continuation trade. 9:30 Central, we have the first hour's high. It is called the initial balance high. We know there's over 90% probability, past performance, again, not indicative of future results, that we're going to take out either the first hour high or low. Given that we've rejected the low and hit our targets on the downside, I don't know about you, I'm leaning here. And I know if I can get out here, I've got this, I've got the stops over yesterday's high, and I have the stops over the outside edge that we made several days ago. Those are my targets. Why? Stops. Fuel. Is everybody with me? Let's watch. Naked volume point of control, IB high. So here we have the IB break, high probability. The IB high set at 930. Stops at yesterday's high, and this is all targeting with more up above. Now I have a choice. The choice is if I pull back to get long. Let's look at my volume. It's here. This is the IB. This is an outside edge of a distribution. There's my micro high volume structure. So now I'm going to look for a long. Let's look. Let's see. There. Right there is a structured trade in the Trader Lab. So let's look at it. I'm going to open it up for you and show you the whole enchilada. You know, I'm down in Costa Rica, so enchilada shows up and a lot of other things. But it's not Mexican, so you guys know. Costa Rica is its own thing. It's Central America, so it's not Mexican. It's Spanish, naturally. They speak Spanish here, but it's different. So here's your micro high volume structure. You can see it there. Here's your IB. You can see it there. Remember our shopping experience. Retail, you can see it there. So retail there, retail here. High volume there, high volume there. If this is retail and it goes on sale, oh, it's on sale, and this is the fair price, then the buyers might go, hey, it's a deal. And let's throw a few extra of these S&Ps in the cart. Retail. And this is a target, ETH high. So we have a high probability here. And then we go back for this. So that's our target. So let's watch. So this is your long against here. Long. Now let's say you're sitting here like a deer in the headlights, which is fine. We're all doing that. We're all going, what now? But I know this is too low because I have my buyer. I now counter rotate, and right here is my location for my long for the continuation trade, IB continuation. There's my buyer. I pull back. So if I see this, I can be getting long here, and my stop can be under here. Or if I'm daring, I'm getting long in here or here or here, and my stop's under here. It's all a matter of here. I like to stay under high volume. It would be under here. You guys with me? So it would be here, under this, okay? And then I'm going for this, but more important, I'm really close to that high. And I know the market sold off from that high a couple days ago. So what's above me? Buy stops. So let's just look at the sequence. This is the next target right here. And you could scale or exit ahead of it or do whatever you want to do. Or you're managing a runner because who knows where the high of anything is. But I trade the targets. So we get in there. We get our stops. Let's look. Liquidity in the book. You got some icebergs. Who knows, right? Wouldn't you like to know? I wish I knew. I don't know anything, though. So what do I see here? Let's look. No, I don't know. Seller. See the change in behavior? And there's a lot of urgency here. That's delta. Okay? See the change in the volume. Okay? And we know the market's long. So when the market gets long, the potential is to counter rotate at least. Are you guys with me? So right here, you're out of the long. Now, how do you get short if you wanted to? Well, you got to have a structured trade for it. Let's see. Watch. So this, clueless. This jumps in the book. We want to see what the behavior is. VPOC migration. Does this look familiar? I'm going to label it variable high volume node because I don't know where it's going, or I don't want to forget that this happened. So what do I want to see? If it's going higher, and you've seen this before all through this stream today, I want it to come out and I want it to push off. What does it do? We break down, I pull back. I got to clear this to go higher because possibly this is too high. So in the microstructure, maybe too high. There's my seller. Volume. There's my seller. Here's my volume. Test. Seller. And right now it's a suspect, right? I can't sell the high of the day or buy the low of the day. I'm still working on it. Almost 44 years, I'm still working on it, and I tell you the truth, I've stopped working on it. So right here, this says retail. But the thing about retail is, what happens if it's a retail price, but the shoppers think it's too expensive? That's where the kicker, if you will, is. I break below. I pull back. Now I got to clear this. If I can't clear this, then we're going to come down. Let's see what it does. Watch. What a coincidence. Too high. Short. Where's the stops? Here. Let's watch. So the stops are under here, and here's the following. You can assume the following possibilities. Retail trader behavior, and we have a couple trades in the Trader Lab. I want to tell you about them. This is a short down to here. The possibility is then to come to the mid and the VWAP, take those guys out and keep going. Or, and here's the or there's another trade in the Trader Lab called the VWAP to VPOC trade. So you got to kind of think about it like, what are the possibilities? So potential short to here or potential long back to here. Let's see what happens because I haven't seen this. I don't know. See? Look at the behavior. So what do we have? Too high, potential long to here. So depending your preference, and this is subject to vetting, it's either a short to there or an exit subject to your plan, or a short to there, or a long to there. And I'm saying or because these are structured trades. It's up to you. You could trade either side. It doesn't matter. So let's look at the behavior. VPOC migration, watch, minutia, micro. So what do we know? Too high. Let me come back here. Too high, too low, back here. Is it going through or is it going to fall down? Wish I knew. Don't know. Part of the joy. I see my seller. Too high. Watch. What do I do now? I return. I check it. Is it really too high? Yes. Short. Now, here, you might not be able to activate. But what you know is this was too high. So long here, I see my seller. That's rejected as too high. What does the market tend to do? Check. It's like you going back to your favorite store. I'm not paying that. Yeah, but I like to shop over here. Nah, I'm not paying that. They're still overpriced. Whew. You leave. Okay? I think. Where are we? I don't even know where we are. Oh, we took out the first hour's low. This is called a neutral day.
ESL 312. Iceberg ESL ICE 537.
Whoops. There you go. So, and then the stops are under here and you would be short or you'd be out of the trade. But once these guys all get in trouble, then you're coming out here and you're potentially going here and here. None of these are trade recommendations. I didn't know where we were with this thing. But you kind of get the idea. Any questions? This is Trader Lab, and these are structured trades. What you do with them is up to you. Any questions? Trader Lab or in YouTube? Hope you're getting something out of this. I'm just showing you structured trades and how to read and narrate. The thing I find in trading is it's just waiting for your trade. You know, if you don't have a trade, you don't have a trade. It doesn't matter. You know, if you're feeling like I'm missing it, that's called FOMO. You should get familiar with that. By the way, if we had the IB continuation trade from above, might we have the same structured trade from below? Let's go take a look. He says, let's look. So if we fall out and we do the same thing from the other side, now here's the possibilities. Remember I said this was an outside edge in the ETH, right there. We also can do anything, you know, I mean, this is trading, okay? So let's go take a look. This here, now remember, these were our targets coming down for the longs. Well, now these, if we're under this, it sets up a short, and the short is going to be in here or over here, but that's different setup. But let's just talk about these, and these are not trade recommendations. If I get a rotation up, I'm going to be looking in here for a potential short opportunity, and it's not a recommendation. We have to get through this to go lower. We have this, we have this, we have this, so we have targeting below. So we're going to look and see if we get a rotation. If not, then there's nothing to do. Doesn't matter. And you have to feel that way. It's like you're playing a game that has an edge. If you are clicking the mouse because, quote, you don't want to miss it, you got to understand that'll take you out of the business. And we're all triggered, by the way, with the same emotional states. It's how you manage them. That's what trade plan is about. Not like, oh, it's going to go to zero and I don't want to miss it, you know. There's always another bus coming by. But emotionally, we're irrational when we're being triggered emotionally by all this stuff, you know. So let's watch. So now we have this came into the book, that's pressure, and we have this liquidity resting down here. So this is new, and it's pushing into it. So there might not be a short, but we have to wait. So nothing to do. Let me go over here and take a look at this. Here's what's interesting about this. Coming down this time, these were targets, remember, to go long. Support becomes resistance, right? Right here, you come down. And we're seeing our selling, and we know there's sell stops under the low. Volume, break, pull back. Here's the volume. So volume, break, test. This is advanced, so you guys wouldn't be doing this. This is a short, but let's assume you're not on this. So the next one is going to be potentially a test here for continuation this way, okay? So let's watch and see if we get the rotation. There's our rotation, and I'm out of time pretty much. This is not a trade recommendation. We want to watch the volume here, and this is a potential structured trade in the Trader Lab. Notice how this stayed in the book. This pulled. So this was a press into here potentially. So these guys can execute, and now we want to see. Stops are sitting in this area. So the key to this, and this is not a trade recommendation, remember, these are structured trades, is to look for a triggering structure. You have volume sitting here. Let me show it to you. This is what you would be leaning against for potential short. And guys, this is not, I don't call trades. Everybody takes stops. There's nobody's immune. And this is a potential short. So let's watch it. I'll try to hang in here for a few minutes. And I want to, in the meantime, I want to mention that if you're getting any value from this or you find this interesting, there's a link in the bottom of YouTube that you can click. It'll take you over to the Bookmap Discord Trader Lab chat. There's 60 PDFs of structured trades like these that you can download and reverse engineer and vet and see if you can determine and extract a statistical edge. The business of trading is the way casinos operate. It's random. Casinos only play games that are structured. They're not making it up. They're not changing the games. If a gambler walks out with a suitcase of cash, instead of playing blackjack with 7 cards, they don't throw 10 out there because they feel bad. They just play the game the same way. Let's use the casinos, which operate in a random environment like we do. The cards coming out of the deck are random. The gamblers play the cards randomly, and who knows? What do we know? Casinos make money. What else do we know? They're in the same kind of random environment we are. What else do we know? They don't make it up. They don't impulse in. They don't change the game. They only play games that have statistical vetted edge. And they have confidence in playing those games because over time they extract the dollars from the gamblers. What they don't know, the casinos, which hand, anything, except if they have the discipline, which most of us don't have, to only trade or play, if you will, games or structured trade that have an edge that over time, if they do the job, manage their emotions, and I can tell you the dealer doesn't get emotional, they're going to extract the dollars from the gamblers. That's why they're building bigger casinos. That's why they can afford to give you the cocktails, the ticket to the buffet, and comp your room, fly you in, give you the limo, give you the bottle of champagne and tickets to Adele, and still build larger casinos and make a profit. Can you learn from that? In my opinion, that's the business we're in. Not the indicator business, not the curve fitting business, not the trader groundhog business. The problem we have as traders is we're in a random environment. So we have wins, just like the gamblers do. They win. And the gamblers think maybe a little of this, a little of that, and they'll do better. And maybe yes, maybe no. But the casinos aren't playing it that way. Why wouldn't the casino use that process that the gamblers use? Because it doesn't work for them. Maybe as traders, we should kind of emulate a winning process. And that is the casinos. And of course, past performance is not indicative of future results. But do you think you might be able to create an edge by emulating a successful process? And remember, the outcome of the next interaction or any trade is random. We don't know what's going to happen here. We don't know anything. That's what I do know. That's the only thing that's certain is we know we don't know. Please give a thumb up if you're in YouTube. It's important so the stream can continue and that the Trader Lab continues. Otherwise, Trader Lab may not be here. So it's important that you guys show support. Attend the streams, and if you're in the Bookmap Discord Trader Lab chat, remember this stream is available exclusively to you to download and to reverse engineer all the structured trades. There's a link in the bottom of YouTube if you want to download 60 PDFs of structured trades and a library of webinars, some up to 4.5 hours long, excuse me, of real-time narration. So you could see this as it plays in real time. I don't have that kind of time available to me anymore, but I think you get the idea. Please give a thumb up. Click the link in the bottom of YouTube if you'd like to visit Trader Lab. Trader Lab is a group of like-minded traders looking to leverage their collective experience. Our senior trader has about 54 years experience. I've been doing this going on 44 years, which is basically not a badge of honor, but a badge of pain. This is how you learn. And maybe all of us coming together can leverage that experience and we can all get better. That's what the Trader Lab is about. Also, Bookmap offers a substantial porthole of free educations, stocks, options, crypto, order flow with a high-tier tool like Bookmap, algorithmic behavior, options, market maker behavior, and so much more. And it's all free. You don't have to be a Bookmap subscriber. You'll never be solicited. And as my mother used to always say, free is good. Thanks, everybody. Thanks for visiting the Trader Lab. Please give a thumb up in YouTube. It will help the stream continue. Let Bookmap know that you're getting something from this so that the Trader Lab can continue. Thanks, everybody, for visiting. Thanks for visiting the Trader Lab. And please remember, if you're in the Trader Lab, this stream is available exclusively to you for screenshots, reviews, circle arrows, and to become the best you can be. We're all in this together. We're going to leverage our experience. The Trader Lab is a serious community of traders. If you're not interested in romper room, but a serious approach in a serious community, visit the Trader Lab. And this, remember, the current trade is a structured trade. It's not a trade recommendation, and it is a short from here. And it's narrated live. And remember, this is never a trade calling room. It never will be. It's for educational purposes only. Thanks again, guys. Thanks for visiting the Trader Lab, and I look forward to seeing you guys again here real soon. Thumb up, please, on YouTube on the way out. It's really helpful.